I want to start this video by showing you something. Again, this isn't bragging or flexing, but one thing that I learned when I was 18 until the age of 20, I was in a management position. And one thing I learned is that people need to see value in whatever you're teaching if they want to listen to you. So I'm hoping that in me showing you this, you understand that I'm not just some guru trying to sell you something. Like I actually know what I'm doing. These are all of the evaluations that I have taken since the beginning of June. There's a couple more at the bottom of the page, but I don't want to scroll too far because I have my active accounts up here and I don't know if it's okay to show that. But since end of May, beginning of June, I've passed 20 top step evaluations. I've actually passed so many evaluations that I cannot buy anymore for the rest of the month. They're saying you have taken too many payouts on XFAs. You can't use any more evals this month, which is crazy. They're saying they don't want any more of my money because I am passing these evaluations so quickly that they don't want any more of my money for the month. They're like, these are your last ones, then you got to wait for a little bit, which is funny because, get fucked basically. Glasses are going on because I'm sick also. So if this video I seem like a little bit less high energy, I apologize. I am sick. I've been ripping the Pepto-Bismol and electrolytes for 2 days, and it's we're not having a good time. But in this video, it's going to be a little bit of a freestyle. But my channel has been growing exponentially. And I think it's because I'm very transparent with what I'm trying to show you, and I just want to help you succeed. Yes, you watching this video, I want you to succeed as a funded trader. And if you're new to the channel, my name is Isaac. I've been trading futures for about 5 months. I got into stocks and trading when I was 17, but never really knew any. I was literally trading with a trend line. I was buying Tesla stock. I had no idea what I was doing. So I say I've only been trading for about 5 months, and I've taken, I forget exactly what the number is. It's a little bit over $15,000 in payouts, and 13,500 of that is in the past 30 days or so. Actually, I think it might be the past 5 or 6 weeks now. I'm on pace to have a 20 to 25K month this month, and I kind of just want to go from the very top, or I guess from the bottom up, of how I'm able to do that. This is kind of a sequel to a couple videos I've already posted. If you haven't seen my video, how to actually make money trading, I think what was the title of that video? Hold on, let me double check. I think the title is my most popular video, and it's the video I think people get the most value from. It is how, come on, give me 1 second, guys. How to actually make money trading prop firms. That video has been doing really well. People love that one. And I kind of just wanted to go a bit more in depth on some of the things that I talk about. I'm going to reiterate some of the things I said in that video just because my audience is getting significantly bigger, and I want to make sure everybody has, the same stuff, the same sauce, if you will. So I'm going to start by recapping I don't know if I'm able to actually pull that up anymore because I just passed them. Let me see if I can do. Okay, boom. So I'm going to pull this up. This is the evals I just finished trading, and I'm going to show you the stats and what it should look like when you pass a combine. So this is the account I just passed. I think I'm good to show all this stuff now. But yeah, I created these accounts July 16th. It is currently the 21st. We only traded 3 days on these accounts. I did not trade one of the days because price action was horrible. My worst day was a break-even day, so minus 14 because that's broker fees and stuff. And yeah, basically this is what it looks like. I took 4 trades total, or 3, excuse me. These are you know what I'm saying? I scale in and out. But this is what it should look like when you pass combines. So I'm going to take this off of the screen now. If you're spending longer than a week on a combine, you're not playing the game right, gentlemen. Or ladies, but my statistics say that 100, not 90s, 100% of my audience is dudes. So what's up, fellas? But yeah, bro, if you're spending time on an eval, that's monkey brain. I had somebody leave I got my first hate comment, and somebody was like, So you're basically flipping a coin on if you're gonna, pass your eval, and then you're risking all this money just to take a huge payout. I ended up deleting the comment because I responded negatively. I was like, "Have you had a 15K month?" And I shouldn't be feeding into that. But moral of the story is like, yes, basically you want to get better than 50% odds, right? You're talking about your win rate at that point. But like if your win rate is 70% plus, the chances of you winning 2 trades in a row is pretty likely. And my win rate is, again, usually about 70%. It's a little bit lower because of all-time highs. But my combine results speak for themselves. You saw the page. I have not failed a combine since, I don't know when the last time I failed a combine was. I could go back and look, actually. Might be worth it just to see when the last time I failed a combine was. I think this is as far as I can go. Oh, so this is ever since I started trading Top Step X. So ever since I've started copy trading, I have not failed an evaluation. Interesting. That's funny. But yeah, guys, like that's the first thing. Like pass your combines fast, because if you like have a winning strategy, and I'm going to go into like what to do if you don't have a winning strategy, but if you have a winning strategy, you should be wanting to spend as much time on the charts actually making money as you can. Unless you just trade because you think it's fun and you're not really trying to make money, so be it. But if you're trading because it's like, you want to be having 5-figure months, you want to buy that car, you want to buy that watch, you want, these materialistic things, and you want money, you got to be passing your combines quickly, because you're not making any money trading evals. You're not making any money trading evals. And the only person I've ever seen actually talk about this for free is Justin Werlein, who's also, his content's great. I learned a lot of my strategy from him. But I kind of figured out the combine process on my own, because it's kind of like a video game in real life. You know what I mean? But that's the first thing. Just pass your combines really quickly. And then I'm going to go into risk management as I dive into my strategy here. Actually, let me make sure that I can pull this up. There's nothing like incriminating. Okay, cool. Let me pull up a chart, and then I'm going to kind of go over my strategy and how much you should be risking per trade and things of that nature. I don't know if you guys can hear the thunder, but it's crazy. So again, I've talked about this so many times, you guys, but here's the strategy, right? So I'm going to kind of go a bit more in depth here too, because there's some things I don't always talk about. But number one is you want to identify the higher time frame bias, right? So are you taking longs or shorts? That's the first thing you got to figure out, like in the day, is like, what am I looking to trade today? So let's start with this. How do we identify the higher time frame bias? Let me show you how I did that today. So we start with the daily. You can even look at the weekly, right? Last week's price action was pretty shitty, but let's see if we were displacing to the downside, right? Let's look at these lows. Did we ever displace underneath these lows? No, we didn't. But after this period of accumulation, right? So we accumulate here because price moves in a couple different ways, but one of those ways being accumulation. Now, then we have this high that we put in. We displace over this high. We don't close underneath the displacement move, and we also create a fair value gap, right? So this fair value gap, what I prefer to call them is SIBIs and BISIs, right? So I prefer, if you look like when I draw out a rectangle in my preferences, right, I have BISI and SIBI because I think it helps me to understand better what it actually is. That's a buy side imbalance. There's a imbalance of buyers here to sellers. So when we create this imbalance here, that's a really powerful confluence that price is going to want to go higher. So then to identify the higher time frame bias, okay, cool. The bias is going to be bullish. That's going to be the case for a lot of days, right? If you just look at the daily, like it's always going to look pretty bullish generally, like unless we're in like an actual downswing, which happens. But a lot of the times on the daily, it's going to look bullish, right? Let's look at the 4 hour. Then what I want to see is, I'm going to put this here because it's a little gem. What is being respected? So what do I mean by that? What is being respected? So let's look at this. Let's start here, right? We have this 4 hour SIBI, right? Sell side imbalance. There was an imbalance of sellers to buyers here. How does this imbalance get treated? It gets absolutely ran through. And in the process of running through that, we actually displaced to the upside a couple times, right? So right here, we have a BISI, right? If you look right here, it's a very small one, but it is a BISI. that gets tapped into and respected. And then same thing here. We put in another BISI with the 4 hour. So we see more displacement over these highs. Now we do retrace, but we respect consequent encroachment, i.e. the middle point of this fair value gap. And we are bought out of it, inversing a 4 hour SIBI. So everything on the daily and the 4 hour is telling me that we want to go bullish, right? So that's the first thing I'm trying to do every single day, is just getting a clear idea of where I think price wants to go. So that's the first thing I'm looking for, is my higher time frame bias. There's a lot that goes into that. And then the second thing that I'm looking for, and this is going to be on like a lower time frame, right? Like maybe like the 15-minute. I want to see if we're in a period of accumulation, manipulation, or distribution, right? So here, this is accumulation. Now, this is basically what my entry looks like every single day. So let's say we had a move up overnight, right? We're generally moving up, and then we start to accumulate. So my higher time frame narrative here is going to be bullish, right? Let's say we also have like resting liquidity up here and up here. What I want to see is some form of manipulation. And the way that I look for that, where's my text? The way that I look for that is I want to see an SMT or a liquidity sweep, but I almost always only trade with an SMT, which you can see I have marked out here. Now, what is an SMT? SMT is a divergence between two correlated assets. So that would be like between NASDAQ and the S&P 500. So let's say on market open, we see NASDAQ and ES dumping, and then NASDAQ takes out these lows. But let's say we go to ES and ES doesn't take out these lows. Let's say ES stops, here. This would be the SMT. It means that's a pretty good way to tell that price is manipulating. And I like to see this on the higher time frames, right? So we're able to see this SMT on the 15-minute. And then if we go to ES, if we go to the S&P 500, let's go to the 15-minute. So we look at these lows right here. These do not get taken by ES. So and then immediately what happens after the SMT, also tapping into this 4 hour imbalance, huge displacement move up, right? So we have this accumulation phase, then we manipulate, then we deliver price higher. So that's basically PO3, power of three. It's a very popular strategy. Now, I don't exclusively trade PO3, but the moral of the story here, guys, I'm going to zoom in for this, is it's not about having one strategy or even an entry model. Entry models are kind of overrated in my opinion. You don't really need picture perfect entries. Maybe with funded accounts, it's worth it because some of them have daily drawdown limits. So it's also good for your psychology to spend as little time in drawdown. And I'm going to explain how I like to get better entries, but it's not the most important thing. The most important thing isn't having one strategy that's this, that, and the other. Cool, it's nice to have models. I trade a model, right? Market maker buy model, market maker sell model. But the most important thing is you want to look at confluences, right? This should not be your first time hearing this word. If this is your first time hearing this word, you need to go study a little bit more. But a confluence, again, is just going to be break it down. Con, influence. Con meaning with, influence meaning to have an effect. So it's multiple things that happen together that create an effect on the market. So your confluences are going to be either bullish or bearish. So if I'm going long for the day, I want to see as many bullish confluences as I possibly can. And if there's a day where I'm getting contradicting confluences, I might not trade for the day because I won't know where the market wants to go. But here again, going from the top down, let's look at the confluences we have for the day. Right? Order flow on the daily and the 4 hour is overall bullish. We've been respectful of buy side imbalances. We've been disrespectful of sell side imbalances. We continue to create higher highs, and we're also displacing on the 4 hour, creating another buy side imbalance. Then when we look, a little bit closer, we see that after a period of accumulation, NASDAQ manipulated these overnight lows, ES failing to take those out. And then we immediately see we get a change in the state of delivery on the 15-minute. We also inverse a 15-minute sell side imbalance, fair value gap, bearish fair value gap, whatever you want to call it. And we create this breakaway gap on the 15-minute. By breakaway gap, I just mean it wasn't revisited. So those are the first things we're looking for, right? Where's my boom? So again, these are like the main things that I'm looking at, right? So these two things help me to identify where I want to see price going for the day, right? So we have our higher time frame bias, and then we have our SMT liquidity sweep, right? And these two things are happening in the higher time frames. I'm not really looking at like SMTs on a lower time frame, like a 1 minute SMT, et cetera, et cetera. Now, what's the third thing that I'm going to do? Hold on, let me just drop down first. I want to drop down, and I want to see. Now, I didn't really do this today because price action was a little bit, unique, but I did to some extent, right? So what I ended up entering on for my trade today was retracement into a 30-second fair value gap that we ended up being respectful of. So we respected the 30-second fair value gap. I ended up entering, I think, on this candle here, somewhere in this range here. I'm not totally sure, but it was somewhere in this ballpark. Could have been the 15-second too, but again, I have the trade recorded on my shorts. So then I want to see, even if I'm looking to find a continuation move, I'm looking for retracement on the, where the hell did it go? I'm looking for some form of retracement on the lower time frame. And then I'm looking for a change in the state, an IFVG. But overall, what I'm looking for is displacement higher or lower, depending on which way I'm trading. So again, like I really do think my model's pretty simple. There's a lot of like buzzwords in here like SIBI, BISI, SMT, displacement, etc., etc. But overall, I think it's a pretty simple model, and this is what I trade. Now let's go into like risk and reward and what are we targeting, right? So in this example here, I'm targeting anywhere from, generally I don't go lower than 1R. So like I'm trading 1R to, 1R, R plus basically. Generally, I'd say my average I'm targeting is like 2R. Sometimes I catch 3R. Generally, the highest I'll go is 5R, but I have caught in 10Rs before on the channel. But on average, it's probably like 1.5 to 2R. And this is where the sauce comes in. If you are on an eval, you are going to risk 100% of daily drawdown limit. You're going to risk 100%. So on the 50K combines, you're able to risk $1,000. You should risk $1,000. Now, I'm at the point where like I don't really need to do that every single time. Like I'm not going to instill more risk just because I can, right? So like on this trade today, for example, with 20 contracts and my stops below here, like I was able to get away with only risking 750. Like I'm not going to risk the extra 250 for no reason. Some days I'll have trades where I'm able to catch a 3R or a 4R and only risk, like $400 or $500, whatever. But when you're on an eval, did I delete that by accident? No. When you're on an eval, you want to risk 100% of your daily drawdown limit. Now, if you're on an XFA, this is where it changes a little bit. You want to leave a 3 to 4 loss buffer. Now, again, this is where I got a hate comment and somebody was like, so you're basically gambling on, you're going to win this many trades just so you can get a big payout? My brother in Christ, yes. Abso-fucking-lutely. I want a big payout. What are you trading for if it's not for payouts? Now, again, you shouldn't be results-oriented. You should love I love trading in and out, right? I fucking love trading. Like, when the weekends come, I'm like, when can I get back on the fucking charts? But yes, brother. Now, trading, regardless of, even if like you think I'm instilling more risk trading like this, it's not gambling. It is probability-based investments. How about that? It's probability-based. It's all going to be probability-based. But I'm not going to be sitting around with $2,000 of my drawdown limit risking $100 per trade so I have a 20 loss buffer. I've never lost 20 trades in a row. Now, something I'm adjusting is like after I take my first payout, I am risking enough to where I can only lose 2 trades in a row just to build back my buffer quickly. It hasn't worked out yet, but when it does, it's going to be crazy. I'm going to be taking a max payout. But yeah, leaving a 3 to 4 loss buffer. So when I'm on an XFA, if I have a $2,000 drawdown limit, if I'm taking a 1-to-1, I'm going to be risking more like $700 to $1,000 because 1-to-1 is going to be significantly higher probability. Like I'd imagine on a 1-to-1, I'm winning 80% plus of my trades. Now anything over that, I'm probably risking more like 500. Like if I'm taking a trade that's like a 3R or a 4R, I'll risk 500. 1.5R, I'll probably take a 700. Just because again here, what am I banking my trades on? I'm banking my trades based on probability. Right? What are the chances of me losing 3 to 4 trades in a row over the course of only needing 5 winning days before a payout? Very, very low. The chances of me losing that many trades in a row with my strategy is very, 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 very low. Now you might be wondering, someone's probably going to comment, oh, but you've blown X amount of XFAs, blah, blah, blah. True. But that's also because after I take my first payout, I'm immediately trying to grow the buffer again. And I've only been trading for 5 months. I've only really been a funded trader for 2 months. And in that 2-month period, over 5 figures in payouts. And I'm continuing to develop my model and what works well for me. And I'm sharing this with you along the journey. But I said this in the last video, can't be a fucking pussy, dude. Can't be a fucking pussy. If you're scared of blowing a combine or blowing an XFA, you're not going to succeed, brother. You're not going to succeed. That's all it is to it. Now, again, I'm not going super in-depth on like the buzzwords or like the important like mechanics of this strategy. But like I promise you, like this is literally what it is. And I'm also, I guess, kind of looking to see how we react to key levels. And one other thing that I look at, or 2 other things. Yeah. Is equilibrium. I wasn't looking at that today because we're displaced right now. But I look at equilibrium. And I also look at higher time frame PD arrays. Right? So like again, I kind of mentioned like I want to see what's getting respected, what's getting disrespected. And if you're wondering like what equilibrium is, you just take your fib retracement. Let's say we want to find this range right here, right? So we look right here, this low, this high. So let's draw this out a little bit. Like normally what you'll find is like, see that when we put in this high from this low, price retraces back to equilibrium before continuing higher. That's something I do look at. I didn't look at it today because I didn't feel like it was important. And again, that's kind of just like market experience. But yeah, like guys, this is the whole strategy. And a lot of it, guys, isn't to do with your strategy. It's your risk management and your psychology. Like I don't have great tips on psychology because I never really struggled much with my psychology. But like, dude, stop being a pussy. That's really all it comes down to, bros. Again, kind of I don't want to call it like lower quality because I think I gave some like decent sauce in here. I kind of repeated a lot of the shit that I said in my previous other videos. And I'm also sick. I don't know if I said that yet. That's why the glasses are on. But yeah, hope you guys have a great month to finish up this month. I think there's like 10 after today, maybe 9 more trading days. Plenty of time to get another payout if you guys are on XFAs. Even if you're not on an XFA yet, there's plenty of time to pass a combine and get a payout by the end of the month. I'm going to keep you guys posted on my journey for the month. 6-7. Trade safe.